let's talk about cost flows. So I told you that there are costs, we have the assets. In terms of a financial statement, we have equal liabilities plus equity. I don't spend much time on liabilities. I figured y'all can figure those out in your other classes. But let's say we'll have some cash. For now, we'll keep it simple, raw materials. We'll have work in process, finished goods. Under equity then, we'll have, under retained earnings, you have sales. We'll have cost of goods sold. We'll have S&A expenses. So what's going to happen as those little snack cakes go through their little processing? First, someone has to go and buy the flour, the coconut, the glucose. They went and bought that. So, they decreased cash, went out and bought some raw materials. So starting one, we sacrificed cash to get some raw materials in. Next, what's going to happen? Well, we want to start making our little snack cakes. So we go and pick up the flour and the coconut out of the storage, and we put it into what's called work in process. So you have direct materials. Snack cakes going along. It's a work in process. It doesn't immediately, instantaneously happen. Well, what else happens? Well, there's that guy that was throwing that flour and stuff into the mixer. So we'll pay him. We add that to work in process. And for now, we're going under what's called an actual costing system. Because I'm going to totally change up on you in Chapter 3. Just keep it simple for first day. We'll have some electricity to run those machines. We have some maintenance on those machines. We have the supervisor that watches the guy throw the flour in. And so for now, we'll just say we pay for overhead. So all that goes in to making those little snack cakes. We sacrifice a lot of cash, even if it's directly to get raw materials going there. These are costs. These are product costs. But we don't have an expense yet. All we have is a bunch of these little snack cakes on the assembly line. And in fact, even when those snack cakes go to the stage, they're all packaged up, they're sitting in their boxes, and they're just sitting in storage. The finished items, well, they'll go to another asset account. What finished goods? This product cost just follows it here. We're still under assets. We spent all this money on making these little snack cakes, but still haven't got an expense yet. Finally, when we sell some of those snack cakes, however we determine what a sale is, when we hand it off to the retailer, if we call that a sale, that would be something left to your intermediate classes about when you actually recognize it as a sale. But for now, taking when we call it a sale, that when it goes to cost of goods sold. That's when we finally recognize that expense. So when we go and turn over all our information to the financial accountant, this sacrifice of resource that we did at the beginning of the period, some of it is still going to be here. There's still going to be some snack cakes that are left on the assembly line when say the quarter ends March 31st. So there'll be some snack cakes there. There's going to be some snack cakes that we haven't sold yet. They're done, but they're not sold yet. They're sitting in storage. And then some of these snack cakes that we worked on during this quarter, they actually show up on expense because we got some revenue for them. We're matching the cost to the revenue. So what else is going to be happening during this time? We're going to be sacrificing some cash to pay the accountants, the sales team, executive team, general office management. Those costs aren't related to making these snack cakes. You can't say that the accountant that you paid them, set them out each month, which snack cakes they were involved in making, because they weren't ever touching it.
Should be dead.
And then when the
On the
cost of
expenses, yeah. Just
why
to be
would
dead.
it be dead? Yes. But these expenses, we match them up to the period that they happen. That's why they're called period expenses. And we'll talk about them a little bit, but for the most part, we leave those for the financial accountant to deal with, except for a few of them. And we'll be a little bit concerned about their cost behavior, but there's going to be times when we're trying to price these snack cakes. Well, there's this cost of goods sold. We're paying our sales team a commission. Well, we need to factor those into our internal decision making, even though they're not part of the product cost. But we'll talk more about that later. I don't want to get too confused for now. Our biggest problem is going to be making sure we pick out these costs related to the product separately from these costs that are related to the period. And then we get to finish out